Ladies and gentlemen, welcome back to your crypto market update. We've got a fantastic show for you guys today. Today is FOMC day. We're going to be getting an interest rate decision here very shortly, and it's important to temper our expectations. We are not necessarily expecting a rate cut today. Probably not going to get a rate cut today. So for all of you hoping for a rate cut, probably not going to come. I don't think it's going to come. Not until March, May, until we see a Fed pivot. All right. Now, we've talked about this a lot. Okay. We've talked about this a lot. This is all going to come out in the charts. But overall, we've had a pretty interesting couple of 24 hours in the cryptocurrency markets. Obviously, large sell-off, a little bit of a recovery. Things are good. We're going to get to the charts here in just a second. Look at all of the important things. Before we begin, quick programming note. As we always do, we do this show every weekday from noon to 2 Central Standard Time here, safe in the flyover states, ladies and gentlemen. That is, of course, 1 to 3 on the Eastern Seaboard and 10 to 12 if you happen to be in California or any of those other places over there on the West Coast. Are there any other states over there besides California? Something. I know there's a couple. Can't remember off the top of my head. If you like what we're doing, don't forget to like and subscribe so you never miss an episode. You can watch us on Rumble, X, and of course, here on YouTube. Do with that what you will. In today's show, we're going to be doing some live trading. We're going to find out what's trending. We're going to be continuing using our Vidya strategy, low capital, because we are just testing it out and attempting to form a system, just kind of giving you guys a show of exactly what it looks like to build a systems process with the small capital trading, right? And this is the method that I prefer. I like putting my indicator combinations on the chart and then using a low capital account. Doesn't matter whether it's $10 in the account, doesn't matter whether it's $100 in the account. Obviously, that's going to depend on what exchange you're on and what their minimum size is, but that allows you to actually trade. It kind of scratches that, I don't know, that trading itch that you might have and gets you very comfortable with using the system. And this is very important. Logging your information, logging your data, building that structure, building that system also kind of helps you identify, okay, well, what are the pros and cons of the system, right? So again, don't need to be a genius. Simple notepad will do. Just write down your thoughts as you're building the system. You spend a couple of weeks at it. Boom, bok, bing. Of course, if you want more information, you can go through the entire Pathways to Profit course. Links in the description. And shout out to today's exchange partner, BuyedFi, where you will now be able to copy trade me. Starting tomorrow, I do believe. Just finishing. I got everything registered. I'm finishing out. I'm ironing out the kinks, making sure the process is simple. But that link is, I think, the 3rd or 4th in the description if you guys want to go get signed over on BuyedFi in anticipation of that copy trading going live soon. We also are going to be giving away some Jesus coin. Yes, Jesus coin on the Ethereum main net. I need to post out here in just a little bit. I will put the link in the description down below for the official tweet for you guys to go repost and comment on, and subscribe to the Daily Alpha Report down below. Do those two things, and we will be giving away $1 billion in Jesus coin today. 1 billion. And that's Billy with a B, ladies and gentlemen. Billy with a B. As always, as we get into this, if you guys have any questions, comments, concerns, hot stock tips, or death threats, please let me know in the chat, and we'll get right into that. All right. I know what you guys came here for. Let's get right into it. Woo! Hey, good to see you, Node. Yes to crypto, Mr. Unicorn. Shout outs to my early chatters today. Hopefully you guys are doing fantastic. I am so thirsty. I am so thirsty. Did a little bit of screaming last night, as you guys can hear. My voice is failing. And also making me need a lot of water. All right, let's get the music going. As always. Ooh, error. We like errors. Let's play. That looks like a good song. All right. As always, let me know if the volume is too loud, too soft. Let the kids be, man. Don't. Yeah, I reserve all of my screaming for the children. All of my screaming for the children. All right. Let's see here. We are, of course, going to be getting it right from the source once it releases. Should be getting that announcement here at what is it? The Forex calendar is saying that it's coming out at 8 p.m. That's not right. None of this is correct. But I had let's just ask Grok. All right. It should be 1:30 my time. All right. So 1:30 my time or 12:30 my time. And then, so we should it should be pushed back a little bit. We will be watching Jerome Powell live on the stream. No change on rates. Absolutely no change on rates. Give me the answers, Grok. Yeah, 2 p.m. Eastern. So that means we're going to get the decision here in about 54 minutes. And then Powell should speak 30 minutes after that. Yeah, so 2:30 Eastern, 1:30 my time. So we've got about an hour. We got about 54 minutes until the announcement and about an hour and a half until we can watch Jerome Powell live. All right. I think we'll start today with this. This is a pretty good thread I found on the FOMC. And we're just going to kind of go over this. This FOMC is one of the most important FOMC meetings we've seen since Bitcoin rallied from $60,000 to $106,000. It's the decider. And this article will tell you everything you need to know ahead of today's FOMC. I'm sure you will. The upcoming Federal Open Markets Committee meeting is poised to be one of the most crucial macro events this year, as it holds critical implications for the broader financial landscape. I've learned these hand gestures from Gavin Newsom, including the cryptocurrency markets. Since September 24th, the Fed has switched its policy stance towards quantitative easing, cutting interest rates by 100 basis points in total, contributing to an 80% rally in Bitcoin's price from 60,000 to 109,000. However, the Fed has signaled a more cautious path forward with projections of just 2 or 3 rate cuts in 2025, down from 5 previously expected. Following the Fed's decision to cut rates, inflation has once again emerged as a thorn in the side of the Fed. Although inflation appeared to be cooling a couple of months ago, it started showing signs of heating up in the past month, with core CPI remaining elevated, 120 basis points above the 2% target level, and with core PCE inflation also rising since the pivot in September. I'm going to disagree with this a little bit. I know that is certainly what the Fed is signaling. It's what Jerome Powell said when he came out in December. But he had the inflation report in his hand when he spoke the previous FOMC, December 18th. Then we got the interest rate decision just a few days later, that same week. Inflation down. Speaking at the decision, we're really worried about inflation, has the inflation report in his hand. Lower inflation, whatever. Historically, the period preceding FOMC meetings has been marked by volatility. Yes. We usually see de-risking ahead of such an event. Yes. Following the FOMC meeting in December last year, Bitcoin saw a sharp sell-off, losing more than 10% of its value within a week. This sell-off was due to markets pricing in less rate cuts than previously expected. So all the stuff about, it's priced in. No, it's not. Stuff, the markets aren't efficient. Right? Markets are efficient if you're trying to run a market maker bot on the 1 second chart. They're efficient if you are trying to run an RSI scalper bot on the 1 minute chart. You're gonna get chopped up. Markets are way more efficient than you at that. High frequency trading is way more efficient than that. But the idea that all of these big things are priced in, sure. Then if it's priced in, then explain to me why when big events happen, when big catalysts happen, we see wild price swings. Explain that to me. I'll wait. The markets now seem to be de-risking ahead of the upcoming meeting, reflecting caution over more potential hawkish messaging from Powell. How does this affect crypto? To put this simply, an inflationary environment with higher interest rates is bearish for crypto, while a low interest rate environment is bullish for crypto. Why is this the case? Because if interest rates are higher, it makes the cost of borrowing money less. It reduces leverage in the system. All excess money is going to flow. This is how the money system works. How capital works. Money goes from stability, right? It's almost as if, here's the thing, check this out. Your entire life, you've been told that you should have a budget. Your entire life, you've been told about Maslow's hierarchy of needs. If you haven't been told those things, I feel sorry for you. You need to know those things. So we know that we need, right, shelter and security, and then we need food, and then we need whatever, like, and then in descending order of importance, right? With self-actualization at the top, right? But if you don't have a place to sleep, if you're not safe, none of that other stuff matters, all right? Which is why it's like, hey, we need to help all these people out with, you know, like we need to give all this like counseling to people who, you know, aren't we should give counseling to the homeless. Well, maybe we should get them a safe place to live first, all right? Because that counseling is not going to help, okay? Like that job training is not going to help. You got to build a base and then extend out from that base. And the same is true with your finances, all right? If you allow me here for a little bit just to crush the dreams of all the degens out there, all right? It's a popular idea. Like there's memes about it, right? Like, and a lot of people live this, right? Where you'll see the meme of the crypto trader, right? In the spacesuit, right? Laying on the dirty mattress in the apartment with nothing but dusty Cheetos on the floor, right? Nothing but a laptop that's on, you know, cardboard on top of like 2 like Amazon boxes, right? Not a desk, nothing, dirty mattress, not even a blanket, spacesuit though. The spacesuit's important. And there's this idea of, you know, just risking it all for the biscuit, right? And I've talked to a lot of people that have actually done this, all right? Taken their 401k, taken their entire life savings, taken all of their paychecks, quit their job, put it all into crypto, and been willing to just go without for the reward. And what I will say is that that is very hard to do. And it only works if you go into Bitcoin, okay? In my experience, the people who have gone all into alts, some win, some lose, but I mean, everything trends to zero against Bitcoin in the long run, period. It's a fact. All right. I saw a great, let me go see if I can find that. I'm probably not going to be able to. It's probably all the way down here. I wish that X had like YouTube has its watch history. No. Gosh, there was such a great chart. And it just showed. Look at this guy using the guppies even. Look at you. Oh, that's me. That's me. That's me. Oh, that's me. Oh, good stuff. All right. Okay, I can't find it. I'm embarrassing myself. I apologize. Whip. Admonish me. But okay, getting back to my point, right? Dirty Cheetos on the floor, spacesuit, dirty mattress. All right, no blanket. Kudos to you if you want to do that. But for most people who want to trade, I don't think that that is the way to do it, right? I haven't seen a lot of long-term success with that. Most people end up, broke. For every one successful story that you hear about somebody betting it all on a meme coin or betting it all on an altcoin and, cashing out with millions, right? And cashing out with millions is speculative because I see a lot of people hit it big. You'll see a lot of people bull post like, oh man, like I'm up millions. I'm like, blah, blah, blah. But then a lot of things happen. I want you to, if you've never been in the position, a lot of things happen when you are up bigly in unrealized profit. Okay, unrealized profit means that you haven't actually sold into USD and pulled the money into your bank account. All right, even if it's sitting in USDT, it's not realized profit. Although USDT is obviously a little bit more stable, but you have different issues. But when you're up really, really bigly, okay, on a position, weird things start to happen to your brain. Weird things start to happen to your brain. All kinds of deviant thoughts and emotions are going to come into your head. And it is very, very hard to stick to your conviction, to stick to your plan, the plan you made days, weeks, months ago. Oh, who cares about that plan? The guy who made that plan wasn't up $2 million on Fartcoin. That guy in the past didn't know shit, actually. I know better. I'm the one on a $2 million position. I think I'm going to take some leverage and double this up. Gone. And that might sound silly. You might be like, oh, come on, like, no, leverage at the top. It happens so often, so often. Talk to so many people. I've mentored so many students that, you know, hey, set aside money, bought the bottom. They're all up bigly on their altcoins. They, you know, they got all this profit, and they're like, all right, cool. It's time to start throwing it all into meme coins. A week later, it's gone. Okay. So you are not just, listen, it's something I do every morning is I do my daily devotional. It's the first thing I do in the morning, and I journal. And what that helps me do is stay connected to the Justin that was yesterday, the Justin of yesterday. Because the Justin of today always likes to think he's smarter than the Justin of yesterday, or the Justin of last year, or the Justin of 5 years ago. And in some ways, I am. I've grown, right? We grow, we change. But I'm not really that much smarter than the Justin who was trying to plan out his life yesterday, okay? And in a lot of ways, the Justin from yesterday was wiser about things that I might experience today, because we as human beings are very emotional, and the way we feel about a situation shifts like the tides. And our reactions are often based upon those emotions and feelings about whatever particular situation seems to be in front of us. This is why, I mean, just cliches like, hey man, if you're upset, like walk away and think about it for a little bit. That stuff actually works because it changes the way you think about the situation. It even changes the way you feel about morality or right and wrong, distance from a situation, right? Justification for a certain situation. It changes with the time in between you and the situation. It is very hard to predict, and you just have to go through the experience of being up bigly on a position. And it's very, very hard to stick to your convictions. That's why I know this page is blank, but plan the trade, trade the plan. Write it down. Okay? And then don't change it. Take profit. Put it in your bank account. Put it in your savings account. And then ultimately the lesson here, right? So my whole point here, where I'm getting to, is with regards to how capital flows. And my recommendation for you. The capital markets flow efficiently, right? Treasuries, bonds, okay? It's where it's the biggest market in the world, minus Forex. Okay, but that's currency. Bonds, treasuries, and then stable stocks, the big stocks, the Magnificent Seven or whatever, right? And then risky stocks, and then penny stocks, and then crypto, right? And maybe in the crypto basket is like private equity, maybe that's above or below it. But the whole point is that as institutions, as funds, as traders get more profit, they then spill that capital over into their higher risk buckets. And when they have to contract, when they feel periods of uncertainty, they contract from the top down, from the riskiest assets down. No big fund, no big trader, if they feel market uncertainty, is going to dump their, I don't know, their SPY, right, over, or their, you know, their triple V, their VVV, or their VIV, or whatever, right? Whatever ETF, you know, you're using to play the market. They're not going to dump that and then hold on to their Bitcoin. All right. Speculatively, they're going to dump their Bitcoin and potentially increase their SPY holdings, right? Or go flat. And I recommend you do the same. Okay. If you want, you know, believe it for what it's worth, right? But it's done well for me. Okay. Just following the Dave Ramsey basics. All right. If you're not in a good financial situation, okay, first off, do whatever you can to increase your income. Always do that. That should be a lifelong goal. Increase your income, right? Get more skills, be a better negotiator, bug your boss, switch jobs, whatever you got to do to make more money, make more money. All right, do that. But then when you get that money in your hand, have a budget. Don't spend recklessly. Set money aside for an emergency fund first. Okay. Do that first, and then set money aside. This is how I could go over mine. Like I set money aside. Well, I have my emergency fund set aside. So now that that's set aside, okay, now I'm funding my Roth IRA. Okay. After I fund my Roth IRA, then I put money into, well, actually before I fund my Roth IRA, I put money into my daughter's 529. Okay. So emergency fund, educational savings for my children, Roth IRA, which I trade. I have a very different strategy in my IRA account than I do in anywhere else. And then my long-term investments, and then my trading account. All right. Now I started doing all of this a decade ago. And so now I'm in a position where I don't need to fund my trading account. My trading account is at the level where I withdraw the profits from it every month. All right. And that is now, thankfully, thank God, my primary source of income. So, but I wouldn't have gotten there, and I wouldn't, even if I had a lot of money in my trading account, if I didn't know for a fact that I had my retirement account, that I had money set aside for my daughter's college, and that I had an emergency fund should I get into an accident, I would be very, very uneasy. And that unease would creep into other areas of my life. It would make me a less efficient trader. It would make me a worse father. It would make me a worse friend. It would make me a worse mentor. Because while I could be doing good with a trading account, man, trading is all over the place, man. It is a wild, wild, wild profession that does not have a lot of stability. All right. And for those of us who can hold on to that knife with our teeth, God bless us. All right. God bless you guys if you're able to do that. It's tough. It's not easy. All right. Sometimes you come on the show, oh, I'm like, that's sexy. This dude just sits around in his freaking pajamas all day and trades. Yeah, it's nice. Okay. But it's fucking hard. And it was hard to get here. Okay. It's very rewarding when you get here, though, when you cross Valhalla. But getting here means being responsible. So if you guys want, yeah. Buzzy over on X. Hey, that is a great question. If you're watching on X, let me see if I can help you out here, man. Let me, okay. Let me make a post here. Or maybe I can, yeah. So I have profit bears here. Okay, let's go to this one. I'm going to copy this. I'm going to post. Okay. Okay. To enter, like, repost, and should we, the easiest thing to do would just to have people comment their, no. I'm gonna have you guys email me. All right. That'll be easier. That way you guys don't have to post your, even though it's like, it's not a big deal. That way you don't have to post your public address on X. All right. To enter, like, repost, and comment on the embedded post below. Sign up for the crypto alpha report. Actually, I am just gonna have you guys comment your public address, right? That's what every other, right? Is this because it's either, listen, it's either, okay, it's either post your public address, okay, or it's don't post your public address and, like, email me, right? Yeah, I'm gonna put the link for the alpha report in a pinned tweet on my profile. It's already on my profile, and it's in the description on here on YouTube and Rumble for the video, the live stream that we're currently doing. But Let's see. The link to sign up for the alpha report is right here. Boom. And then just email me. That's the easy. And then I'll just have, yeah. All right, I think that's easiest. Gotta love it, man. It's the chat, you know, like I'll be doing a thing and then I look at the chat and it's like, ah. All right, so, okay, to enter, like, repost, and comment the post below, which will be this post from Profit Bear. Yes. And then, yep. Sign up for the Crypto Alpha Report. We don't spam you, but we send out daily or bi-daily market updates, news, and more. And then email me. That way I can confirm that you're on the Alpha Report list. All right, so we're going to post that. Why did it not embed? Let's edit this, okay? The linked post below. Sign up for the Crypto Alpha Report. Email me. It's my email, yeah. Okay. Post. Okay. I wish it would let me, usually it embeds the tweet. I wonder why it's not doing that. Embed post. Embedded post. No. Oh. Like that. That's why. Right? Update? Refresh. Why did it not update it? Whatever. It's not perfect, but we're going to pin this to my profile. So if you guys are following on X, do the thing. All right, so click here. You click the like button. Oh, wait, that's the comment. Just click the like button. Click the repost button. All right. You can either repost with a quote or you can just repost and then comment. And then go here, input email, and then send me an email. Tyler, keep that up. You're not going to be a moderator anymore, man. Cashed out my 401k, put it all in bacon futures. I mean, to be fair, right? Like I say this and I trade my Roth IRA. I am probably going to, something I'm looking into is actually setting up a 401k for Kraken cryptocurrency, because then like, it makes more sense just to have it automatically done like that. There's probably like tax advantages too as well. But I digress. All right, where were we? We were talking about this. So we have cooler CPI data, but the possibility of future tightening lingers. Just about 2 weeks ago, the release of the consumer core price index, the CPI, revealed a cooler than expected inflation rate of 3.2%, still 120 bips above the Fed's 2% target. This unexpected drop provided a temporary boost to risk assets. Bitcoin rallied from 97,000 to 106,000 in just a matter of days, edging closer to its all-time high. How many people are edging right now over the price of Bitcoin? But this positive momentum has not erased concerns over broader macroeconomic uncertainty as ISM price services paid in PCE, which is like what manufacturers pay. Inflation has still continued to rise. So inputs for manufacturing are still going up, even though the basket of goods that we measure via inflation is technically going down. All right, blah, 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 blah. All right. Polymarket is holding the odds that rates hold steady at 98%. Polymarket's never wrong. Cutting rates too aggressively would reignite recession fears. All right. While a rate hike in this situation isn't impossible, it is unlikely the Fed would abruptly switch its monetary policy stance. I think if they raise rates today, not only is everything going to tank, but I think Jerome Powell is going to die. I don't think he's going to make it out of the building. All right, let's cut to the big picture. This individual believes that the Fed can only delay quantitative easing for so long. Quantitative easing would be injecting money into the money system, as keeping interest rates higher for longer would only dig the U.S. deeper into an already existing debt crisis. When this happens, the Fed would inject liquidity into the economy, meaning crypto and other risky assets would most likely pump. In summary, the FOMC's first meeting of 2025, blah, 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 blah. A hawkish press conference could trigger retracements in crypto markets, while a dovish pivot might reignite optimism. As the Fed navigates a fine line between curbing inflation and supporting economic growth, prepare for heightened volatility and avoid leverage and overexposure to avoid substantial losses. This was definitely written by an LLM. But I digress. Make sure that is pinned appropriately to the top of my profile. Yes. Can I edit this? I can't edit this. I should have posted the picture. Very professional around here, ladies and gentlemen. We are 30 minutes away from the Fed's monetary policy decision that will either send us up or down. This is not the account that we want to be trading with. This is the account that we're going to be trading with. Okay. All right, let's get into the skibbity-doos, guys. All right. Looking at, we don't even really need this. We don't need this. We've got so many charts. All right, here we go. Where are we at in the cycle? Still at the 50% mark. We have just been hanging, languishing here for quite a while. MVRV is coming down slightly. Bitcoin volatility, 24-hour relative to 7-day volatility is coming down. We are getting an overbought sell signal on stablecoin dominance. All right. Could be a very good thing as we creep up here towards resistance. This might be that great first sign of weakness that we looked at. Markets are risking on a little bit today. We are seeing Bitcoin and stablecoin dominance kind of grind to a halt here, putting in a little bit of a hanging man candle on the daily. Looking at altcoin price performance relative to Bitcoin, we are having a nice doji here after a pretty significant move down. All right, things. What's up with these? What is this? What are you? Oh, it's the zero line dot, of course. Altcoin price performance relative to Bitcoin still negative 28.36%. We are, of course, oversold on this metric and hopefully gearing up for a bounce. Would be lovely to see as we have just now swept out this low. Still not seeing any signs of price, seeing any significant signs of strength. We're, of course, not in a bullish trend. But if all goes well today and we don't get catalysts that are just going to bring us down, if we just get a kind of normal, optimistic, maybe even dovish FOMC, we could potentially see a bounce on altcoins just because we are down so much. Let's see here. Hey Anon, chilling around $11. Really glad I sold in the 20s. Block stack not pumping yet. XRP chilling, consolidating. Official Trump coin. Are we double bottoming? I would really love us to double bottom. Looks like we have established some pretty strong support here at $25, $30, but still in a bearish trend, unable to get above. Come on, let's go. Who wants to report to the president that his meme coin is down? HNT still downtrending. Everything pretty much downtrending badly. Unemployment lines are filled with crypto traders currently. Bitcoin, we do, of course, why are we not logarithmic? What is happening here? Why is my life? Everything. The only way you trade crypto is logarithmically. Who came in here and messed my charts up? I am unhappy. Only ever trade, chart, think about logarithms. All right, starting off on the monthly, we are still in a 1 month breakout. As far as the weekly time frame is concerned, volatility is dropping. This is the exact pattern that I've pointed out before. Obviously, not only are we struggling to get over the hawkishness of December's FOMC, does look like we might be potentially double topping. Last week's candle was not sexy. This week's candle is slightly even worse. We are, of course, overbought. Okay. On the weekly RSI. But in addition to that, volatility has reached the high of about 70% that it typically will do here on the weekly. And then notice that we pull back before we get a move. And here, of course, as we were breaking out, of course, from the $27,000, $30,000 consolidation, we did, of course, continue moving up. But we also had the catalysts back in January of the Bitcoin ETF launching and the Fed pulling back on interest rate decisions. Here, when the Fed pivoted hawkishly in March's FOMC, you'll notice that volatility had peaked here at about 70%, and then we pulled back to low volatility, and then we began that expansion to the downside. Okay, of course, the weekly did hold us up, but right now, we are seeing that exact same thing play out. Volatility has peaked at about 70%, and we are now pulling back, and we are almost below that kind of 10% threshold, which is when we get a signal. All right, at below 10%, BBWP on the weekly is usually when we then get resolution. Of course, you can also wait just for that weekly crossover, but then you're going to miss a couple of weeks. You do really have to position ahead of time. For optimum profitability, ladies and gentlemen, we're still holding the weekly 10 exponential moving average. Losing that is going to be pretty negative every time we lose it. Of course, we did have a secondary bounce over here, but whenever we close below the 10 weekly moving average, it almost always leads to lower prices. Right now, looking at support for BTC would be around $70,000 if Bitcoin were to break down from our current consolidation, which would be about a 30% drop in Bitcoin's price. Can you dig it? Can you dig it? Can you dig it? Can you dig it? All right. Daily time frame, the most important of the time frames. I don't know why we have all this stuff on our chart. It's really distracting and not helpful. We, of course, have broken out above resistance. Who cares about that? All right. So we are basically attempting to maintain and sustain the breakout of the triangle that we're in. Listen. I'm just going to say this, you know, it's probably not a bad time to be long. All right. I would hate for this chart to get ugly, but I'm just saying you got a trade set up here, right? Break of resistance, pull back, retest. Strong buyback here that we had 2 days ago. Okay. All of this could change very, very quickly, but I'm just saying, if you wanted to position for a breakout, I think the setup's on the table. Let's see what such a trade might look like. All right. So just using 1.5x ATR, and you know, for maybe for a trade like this, nah, you never, you know, tight stops are never the way to go. 96,678 in validation, and then targeting up to $120,000. All right, but realistically about 115. There's also a psychological reason why I kind of like where price is at right now as well, because if price does pump and gets up here to 105, like, are you going to catch an entry there? And then if price goes up to 108, are you then going to catch an entry there? Right? When you have the opportunity to buy a pullback when something is bullish, you should usually take advantage of that. So we could be very wrong here. Let's actually go to load for me, my pretty. My personal trading strategy, I do actually need to see price above about $107,000 to take the BTC long to the upside here, because we are trading below the HMA 200. This has just served me pretty well. So we shall see. Probably not the best short entry, but we are still technically in a BTC active short signal from this candle right here. Okay. And that invalidation is about $108,000 as well. So kind of similar to this area of the market right here, where we peaked and we got a hawkish Fed. Bitcoin broke down and then came back up and was unable to successfully close above the HMA 200, which led to more significant move to the downside. You know, I see the issue now. I'm all in, Tyler. I'm all in on deep fried AI. You know, having spent time with you, you actually don't strike me as somebody who actually eats that much deep fried food. Am I wrong about that? Has this been a scam all along? Not a scam, but a posture all along. Do you have a deep fryer in your vehicle? The world wants to know. 16 minutes away from the interest rate decision. And let's all right, what do we got going on here? We got sell ratings on WIF and DEXE. Yes to crypto. Member for 38 months says, true story. Today was the first time I played you in a car with a wife listening. She heard all about the life advice. She's like, he knows. And then you pivot to X and she's like, what the fuck? Only here, ladies and gentlemen. Only here. All right, so Dexy and Whiff we are going to be focusing on today. See if we can grab a trade. All right. We're going to go in on, what are we trading here? Whiff? Yeah, we're trading Whiff. Two X leverage. Nothing crazy. All right, cross below. Oh, delta volume is actually positive, so no. No, actually, I don't believe so. Relatively negative on the 5 and 10 minute. But still too positive. I do believe on the 1. Dexy, on the other hand, doing pretty good here on the 10 minutes. So I think this is what we're going to look for an entry. We just need to wait for an entry signal. All right, that's what we're going to do. So we will just add an alert. Did you guys see this new feature on TradingView, which is absolutely fantastic? So you can actually set an alert for an entire watch list. This is a game changer. We're going to do Minx. Crossing up. Minx. Noise. And then notifications. Toast. And we don't need an app notification. All right. So we'll just set that notification. I can eat whatever I want if I swing kettlebells like I'm supposed to. Nice, dude. All right. All right, the daily is trying to push above resistance at 102.802. And the hourly is at our volume resistance here at about 102.775. Let's go look at where our liquidations are for the day. Looks like we have a lot of positioning here today. We've got liquidations running up to 103, 345, 103, 581. So we probably do push higher here. So I think we're actually just, we might just focus on Bitcoin today. Oh wait, this is not it. This is it. Sorry. Sorry. All right, let's have some fun. Oh, whoops. All right. 10x long BTC here. And we are going to $102,628 where we're going to put our stop. And we are going to target 104,712. Asymmetric risk to reward, ladies and gentlemen. $35 loss, $200 to $300 gain. There's nothing wrong with 1-to-1 risk to reward, but it is very difficult, or it can be quite difficult if your hit rate is low. Hit rate is one of the easiest things to optimize for in a strategy too. All right, 12:53, 7 minutes away from FOMC. And then we do need to get what is this? Okay. President Trump signing executive orders live. FOMC meeting live. Oh, but yeah.
Base effects in the first quarter, but that path from 2.5% to 2% from our perspective is going to be difficult because underlying activity is just really strong. So if you put all of that together, we don't see the Fed really needing to cut. And I think the one thing that's being ignored right now is the news article that we got yesterday, published by Nick Timeros. So we know.
Fascinating. All right, so we're all set up. Ooh, there's our DEXY signal. Boom. $16.72. And $17.69. Oh, we got something happening. Lee Colify. Lee Colify. Thank you so much for the $2, my friend. God bless you. And let's go, Jesus. Yeah, let's check in on Jesus, by the way. Where is my... Aha. $11.7 Productions, $5. Thank you so much. Jesus is King. Thank you so much, sir. Appreciate you. And I do agree. $8.83 million market capitalization. Jesus coin is sitting at. We did, of course, previously reach a high. I thought it was like 50. Here it says 90. All right. So potential 10x in the making, going back to all-time high. Oh, here we go. 1 minute away from the interest rate decision. Let's go.
They modeling that? And with the Fed funds rate at 4 3/8, do they still categorize that as meaningfully restrictive?
I think you'll get that question in about 31 minutes time.
I think you'll get a lot of questions, but I think that would be a really interesting one. How do you model some of these policies at a time where some are looking at tariffs, some are looking at inflation, and some are looking at the open Fed chair seat?
Some assume, some speculate, and some guess, and some have got some real ambition about their career on the FOMC.
Takes a village.
Yeah, that's for sure. Special thanks to Kathy and to Aditya as well. That Fed decision is about 25 seconds away. The scores going into it look a little something like this. On the S&P 500, still down by 0.5%. On the Nasdaq 100, down by 0.56%. Check out the bond market. Here's the whole curve for you. 2-year, 10-year, 30-year. Yields up just a touch, up a basis point or two on a 10-year, 454.86.
Come on.
421.76, up 2 basis points. And finally, just to round it out, your 30-year, 478.87. With the Fed decision, here's Mike McKee.
Nothing burger from the Fed, no change in rates, no change in balance sheet policy, and only small changes in the economic assessment. Recent indicators suggest that economic activity has continued to expand at a solid pace, the first sentence says, a carryover from December. Then a significantly shortened summary, quote, the unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated. Recognizing reality, the Fed did remove a reference to the, quote, inflation has made progress towards the committee's 2% objective, if you want to read a future policy clue perhaps into the statement. But that's it. The rest of the statement, other than the committee maintaining the target range at 4.25% to 4.5%,
very non-committal from the Fed.
The central bankers say again that, quote, considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully
the
assess
reference to
incoming
inflation
data,
making
the evolving
progress
outlook,
towards
and the balance of risk.
We don't even know what inflation's doing right now, to be honest with you.
Inflation and
We have
employment goals are
no
roughly
idea,
in
actually.
balance. The committee continues QT, reducing the balance sheet at current levels, and does not mention any endpoint. And while 4 new members joined the rotation this year, Collins, Goolsbee, Musalam, and Schmid, the decision was unanimous. The rather anodyne statement puts the focus on Chair Jay Powell, who will be speaking to us in about half an hour. Other than acknowledging inflation hasn't made progress, there isn't much in here that will lead you to speculate on what they'll do next.
Mike, just stay right there. I just want to share
All right, cool.
the price action.
Cool story, bro. Can I get the press release? Normally they put it here like immediately. Whatever. Oh, got stopped out on Dexy. Did we get stopped out on Bitcoin too? No worries. Oh, no rate cut. Down we go. Oh, okay. All right. Well, we're going to hear from the man himself here in about 30 minutes. But in the meantime, let's just watch the chaos and devastation. We are in great times. So yes, Profit Bear, the winner might get $50 today, but if you hodl, could be 500. I could just wait. I could just wait. I could just hold. Not Bitcoin, apparently. Very large 5-minute movement. Rejection from the 30-minute value area high and 200 SMA. Rejection from the hourly point of control. Rejection from the 4-hour guppy bands. And I mean, we are really struggling to hold on to the upper boundary of the daily trend right now. Of course, I mean, we still got, you know, plenty of room to go down, but if we take out the highs and reject, I mean, we're probably going down to 77. Which we've already done. Like, we took out the highs, right? So like I said, I can speculate on all kinds of things, but this is how I trade right here. Just wait for the system to load. Wait for the system to load. You know what I want to do? I do want to put video on here, but not to, sorry. Oh my God. going on here, dude? Oh, volumatic. There it is. It's kind of helpful. BTC taking the low and then moving to the upside soon. I hope so. But I mean, like, what low? Like, we had a hammer candle 2 days ago. The low was taken. Big picture, right? If Bitcoin wants to pump, it needs to pump. I gotta go above 102, 181. Guys, let me just say, public service announcement. If you haven't been making any money over the last month, that's fine. It just means you're not a grifter, meme coin scammer, or developer. It's been pretty brutal for the last month. Price action's been pretty shitty. For trend following traders. This one right here. Oh, you probably mean this one right here. 100, 232. Yeah, there's a lot of liquidity there. That would be a move all the way down here. Take out all these liquidations. I'm sorry to hear that, CJ-ness. I am sorry to hear that. But listen, you can always listen. It's never a bad time to start trading right. Never a bad time to put a strategy together. I don't know what happened. Something happened. Oh, IK, thanks for the subscription, my friend. Really appreciate that. All right, let's go see if we got any signals. But yeah, my daily system signal is short here, and we'll ride that out. Readjust bias if we're back above 108. Pretty simple, guys. Let's see here. Oh, we took these lows on the 1 minute time frame. And we are downtrending, and now we're just waiting for an upside signal on DEXY. or we're going to be shorting. One of the two. One of the two. Either way, it's going to be fun. I got Jerome Powell coming up here in about 20 minutes. I am starving. I'm so hungry. Let's see here. Chats. Tyler says, look at the hourly. This might not get real, but it's not yet. Yeah, hourly volatility is relatively low. But so is 4-hour volatility is really, really low. So is daily volatility. So we are on the verge of large move. On verge of large move. We're going to go down more. This is a pretty brutal 30-minute candle. This has been a very brutal last 15 minutes of price action. Well, 10 minutes. This candle just opened up about a minute and 20 seconds ago. Yeah, hourly rejection, stiff resistance. So, I mean, unless you buy a dip, I mean, trend following wise, I mean, you know, at the very least, bearish below 102.844. Tyler says, that's why I love my BBWP system. Did you say you love BBWs? Tyler, there's a support line for you, my friend. Works in trending bull market and ranging sideways ones too. Only gets smoked during prolonged downtrends. Indeed. Big move down incoming. Got a pretty big move down already. What is that? 1% down in 10 minutes. Ah, nuts. I wish I would have caught that on whiff. It's all good. Alerts. Where is where's that alert I just set? Delete. Ah, here it is. Delete. I'm gonna add an alert, and this is going to be price. Interesting. I have to play around with that if I can set the alert. This is a bumpy ride. All right. Taxi, right? Yeah. Whoa, 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 whoa. What? You talk to me. Okay. 1646. Okay. And $17.48. Okay. Vulcan holding your portfolio up. Tell you what's holding my portfolio up: cash. Woo! Woo, woo. Yeah, it has been a bad. Alts have not done well, especially over the last month. It's been bad. Dips. Yum just means my bags grow fatter. Love to hear it, Tanner. Yes to crypto. I will not. I don't live in Colorado anymore, unfortunately, man. I think F Denver is coming up relatively soon, or is it not? I have no idea. I'd love to go. If my plans change, then yes, absolutely. All right, guys. I will be right back. Don't go anywhere, or else. Okay. We're back. We are back. Not enough memory to open the page on the YouTube live chat. End of February, beginning of March, huh? Maybe. No promises. All right, Bitcoin getting a small, I repeat, small buyback from the value area low. So far, staying within range. We're going to see how prescient Brianna Coffee was with the claim that we would sweep the lows and then pump mightily. One thing is certain. One thing is certain. With weekly volatility this low, the dominant direction that Bitcoin chooses is going to be the dominant direction for the next 4 to 6 weeks. Volatility is compressed. Volatility needs to expand, and volatility will expand in one dominant direction. Seven minutes until we can all sit around and make fun of Mr. Big Daddy Papa Powell. In the meantime, five-day BBWP. All right, blue lining and expansion, retracement, blue line and expansion, retracement, blue line. Okay. Well, that might be fun. Get the boys together. Volatility peaked on the 5-day chart. Well, I mean, it peaked on the candle closing November 26th and then retraced until we blue lined across January 6th to January 11th and slightly expanding in the up direction with regards to BBWP. Looks like a little bit of regular bearish divergence on the 5-day chart. Of course, we did get that here, and we didn't get a whole bunch of follow through. You had said something. Hold on, let me open up. I know that you had said. You're out of the Discord. And I am reporting you. You had said something. Maybe it wasn't in the Discord. I thought you had made a comment somewhere about that 5-day BBWP. I guess I could be wrong. All right, 3 minutes away. Let us prepare. I think this is going to be a pretty non-committal speech, but we're going to see.
Permissible and what isn't. How much, Rich, do you think that, frankly, the Fed is comforted by the strength and the resilience in equity markets and with the bond market where it is to basically give no guidance and outsource?
Yeah, okay,
well,
it was a message. Yeah,
financial conditions and policy is an important one, and I'm sympathetic with where you are right now. I do think that to the extent that you do view the S&P as being a check on bad policy or the bond market vigilantes being a check on irresponsible fiscal policy, that's a plus if you're at the Fed versus a minus, I think.
One of the biggest economy has got to rebuild over the next several months and maybe the next several years. And in the last 60 minutes, we've hardly talked about it. California, Los Angeles. I think that's going to be a piece of this news conference through the next hour. The rebuild effort we need to see in the southeast of this country, hurricane hit towards the end
North
of last
Carolina
year.
As well, yeah.
Absolutely.
Yeah.
And in the west of this country, on the west coast in California, in Los Angeles County. That's a lot of rebuilding that needs to be done. And I'd love to hear from them today how much disruption they expect, and distortion to the economic data that we're going to get in the next several months, and the inflationary impact that we could see off the back of that rebuild effort as well over the next few quarters.
Essentially, when people have to rebuild and they have to hire and they have to spend a lot, that can, on the backside, end up to some sort of boom that can be distorted as well. This goes to the point of how do you take data seriously, but maybe not literally every single time.
Then you've got the policy changes expected on top of all of that as well. I think for them, they get a free pass today. No forecast. March 19th gets harder. Mohammed said it earlier. When they have to produce the forecast, that's where things get trickier for this Federal Reserve and for the news conference with Chairman Powell.
You know, every time we say he wants to make no news, and every time he manages to make some news. So let's see what happens when he answers some of the questions, the very good questions that we got from both Bob and Rich.
A special thanks to Richard Clarida and to Bob Michael as well. You can see the scene if you're watching this on Bloomberg TV. Any moment now, Chairman Powell is going to walk through that door. That news conference will begin in about 10 seconds' time. Going into it, equity prices look like this on the S&P 500 near session lows. We're down by 0.9% on the S&P. Bond yields creeping higher across the curve on a 2-year, 10-year, and 30-year. Just a little bit more hawkish than we expected, Lisa, in that statement.
At a time when
guys, once we're done listening to Daddy Powell speak, we are going to do the 1 billion Jesus giveaway.
On the margins, still a preeminent concern. How does he dovetail that?
Here he comes.
Terms of what could
He's here.
tie the difference between
the man is here.
The first news conference of 2025. Here's the chairman of the Federal Reserve.
my colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
He coughed.
The economy is strong, is strong
He
overall,
coughed again.
and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
He sold? Bump
At the
it.
same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year.
And Trump
At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
So far, this is exactly what we expected. I mean, he's literally just reading
Mr. Chairman,
off of the script
at
of what he said earlier.
In Davos, or to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if any, does a president making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work. And that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact. Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
Trump about to get on Truth Social right now and be like,
my assessment
bullshit.
Really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we literally look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further
Bitcoin pumping,
further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say look at the last couple of inflation readings, and you see we don't overreact to 2 good readings or 2 bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well
Bitcoin pumping.
Colby from the
Pump it up.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
Big resistance at 105.
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market. And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret two good or two bad readings, but
Brianna
this was
Coffee,
not meant to
you're
send a
hired.
signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the long run, which where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do. This is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
I see the liquidations basically stop at 104.805.
And radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold, waiting to see what comes down. It's a very large economy, and policies affected at the margin. But we're going to wait and see.
If I can follow up, the idea that you feel that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy's well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster. We could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes, in answer to your first question. But to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, the policymakers to sort of think and understand about the uncertainties that surround us. So yes, the staff does that, and we're all well aware that that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. No one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seemed to set forward is one thing, having it is another. So we're going to want to see further progress on inflation. Remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a. Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for
I was trying to find a fun marble racing game. I see some guy do it once in a while, but I can't seem to find it.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. And I've got no further comment than that. Thanks.
I'll be talking about my job, dude. What do you mean? No, there's nothing but responsible spending going on over here in the hallowed halls of the Federal Reserve. We would never think of taking extended vacations. What do you mean? Absolutely not. All right, ladies and gentlemen, let's do this. So far, I have received 7 emails to enter for the Jesus giveaway, ladies and gentlemen. For the Jesus giveaway, $8.83 million market capitalization gem, previous high of 90 million. Back up to the highs will we go in the short term resistance at 42 million, which is still a nice move up. It's like a 5x. Woo! I was trying to find other funner ways of doing this. Hopefully by tomorrow I'll be able to find one. I'll do a little bit of research and figure out what it is. If you guys are aware of, if you guys know, basically, Anyway, sorry. If you guys are aware, like I've seen different ones, like they're like mini games, you know, where, you know, like you could race marbles and all this kind of stuff, right? It could just be a little bit more fun, engaging, exciting, but well, we got what we got. So, ladies and gentlemen, favorite exchange tokens other than BNB? I mean, OK Coin. It's pretty good. Nice, man. Okay. We've got Tanner, Maxim, we've got Adam, we've got Crew, we've got Crazy, we've got Andrew, and we've got Alfred. All right. So here we go, ladies and gentlemen. Click to spin for 1 billion Jesus, and the winner is it's Crew. Congratulations, Crew. If you're watching, if you're not watching, you guys saw it here first. I am going to email you right now while this thing is still up. Okay. I'm glad you gave me your ETH address. Let me go ahead and send it real quick. Up here. We're gonna send on Ethereum to this address. Confirm. Yep. We're gonna be sending Jesus. Pause. It's 1,000. It's 1 million. That's 1 billion. $56.55. Send. Bloop. Bloop. There we go. All right. I have just sent the first 1 billion to Mr. Crew. All right, Crew. I am now going to remove you, excuse me, from the giveaway. Close. We're going to remove Crew from the list. Ladies and gentlemen, we are going to do this giveaway every day until all 10 billion coins are gone. That's 9 more days. Can you dig it? So plenty of time to enter. If you want to enter for the next giveaway, all you have to do, go to X. All right. My pinned tweet on X, cracking_crypto. It is the pinned tweet. All you have to do is click this post, click the like button, click the repost, quote or comment below. I don't care. You can either post or I just want to see some original stuff. Click this link, sign up for our Crypto Alpha Report, data-driven research delivered daily into your inbox to help you be armed and dangerous with your crypto trading. And that's all you got to do. And then email me. Email me your deposit. Email me the address. Ethereum mainnet. Send me your ETH address so I can actually send you the tokens. You guys have quite a while. All right. 9 more days. Okay. So we will be doing this well into next week. Actually, probably more than next week because we'll be Thursday, Friday, and then 5 days next week is only 7. So we'll be doing this giveaway for about 2 weeks because we only stream Monday through Friday. Thank you for all the participants. Enjoy your time at Spanish Buzzy. You guys have been absolutely incredible. But that's it for me, ladies and gentlemen. Thank you so much for coming to today's live stream. Hold on, let me take a quick peek here. Looks like we are rocking and rolling, of course. Be safe, trade safely. Looks like Bitcoin's encountering a little bit of resistance after we kind of swept up and hit those liquidations. Be safe, be careful. Usually it's always good to wait about 24 to 48 hours following any big catalyst to see if you get a true strong trending signal. Right now, overall just ranging. But like I said, with weekly volatility at the lows, we should be expecting in the next couple of weeks for Bitcoin to pick its dominant direction. And that time might be now that we've got the FOMC catalyst out of the way. Nothing really on the horizon now until March. Really. We don't really have an excuse for anything until March. So now is the time for you to actually be a trader and trade in the direction that you think is going to be the dominant direction. No signal, no trade, ladies and gentlemen. That's the pathway to profit. We will be back tomorrow at 12 p.m. Central Standard Time. If you guys enjoy what you're watching and you guys want to see this every single day, if you want to support what we're doing, free content, educating people on how to become better traders, armed and dangerous. Yeah, it's Justin at crackingcryptocurrency.com. It's right here. Yep. Justin at It's in the pinned tweet. Justin at crackingcryptocurrency.com. If you want to support what we're doing, please like this video. It helps out more than you could possibly imagine. Comment down below what you guys would like to see tomorrow, and share this video to your friends, your family, people you don't even like, that you don't really talk to that much. They need to see this. Other than that, links down below for everything you could possibly need. Go join. Go sign up for the free newsletter, the Crypto Alpha Report. Information down there on the Crypto Trading Academy as well if you really want to supercharge your trading. And of course, shout outs to BuyFi, our centralized exchange partner. Go get that VIP level 1 fee advantaged account and enjoy over 600 pairs, demo trading, KYC VPN free exchange partner of choice of Kraken Cryptocurrency. You guys have been absolutely fantastic. Trade safely. I will see you guys tomorrow. Be good to one another. And, try to follow the speed limit. It's not worth speeding. Bye-bye now.